Hello traders and welcome to the market opening preview, May 20th, 2015 on a Wednesday. We call it Hump Day. And here we go for another exciting trading day. Boy, we have some interesting charts to show you today. Traders, this is brought to you through FXCL Excellence in Trading. Traders, come on and visit us at fxclearing.com for your trading solutions. Traders, coming to you live from Pattaya, Thailand. Bright blue, sunny skies, white sandy beaches, and very hot. Yes, we're cooking in Thailand. Absolutely. Traders, let me tell you a little bit about myself before we get moving here. My name is William Gilday. I am your moderator for the Market Opening Preview Series and also the Friday Wrap-Up. Traders, I started trading in the year of 2006 and 2008. I retired from a wonderful 27-year career in the Fire Rescue Department out of the great state of Florida. Traders, 9 days later, got on a big plane to celebrate my retirement and came to Thailand. Well, guess what? It's 2015 and I'm still here and absolutely loving it. I love trading Forex. I trade Forex every single trading day. I trade all 3 sessions. That's the advantage of trading in Asia. I only do about 2 hours of New York, though, because it gets to that 11 p.m. time. And I start my day at 6 a.m. in the morning. All right. That's just a little bit about myself. I do watch fundamentals, technicals, and yesterday was a perfect example of fundamentals influencing the trading day when some politician got on a microphone unannounced and made a comment and moved all the dollar pairs almost over 100 pips, and I will show that to you. Before we do that, let's get to the legal stuff. This is our risk disclaimer. Forex trading has a large potential rewards, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's head over to news and commentary. All right, what's on the calendar today? Pretty weak day today as far as the calendar. The only thing we have is in the Euro session, we have MPC official bank rate votes. And then we go into New York, and all we have is wholesale sales out of Canada, and those are the only high impact data that we have as far as that goes. Look at the indices. US 30 closed up 0.07%. The S&P 500 closed negative 0.06%, and the Nasdaq closed negative 0.17%, with the Russell 2000 closing negative 0.12%. Let's head on over to the Eurozone, where the DAX closed up positive 2.23%. The FTSE 100 closed in the green at 0.38%, and the CAC 40 closed up 2.09%. The Eurostoxx 50 also closed up 2.05%. Traders, let's head on over to Asia, where these countries are currently trading. The Nikkei 225 is positive at 0.71%. The S&P ASX 200 out of Australia is just negative at 0.15%. The Shanghai is positive at 0.46%, with the Hang Seng negative 0.24%. And ending this round of indices, the Kospi is positive at 0.42%. Remember, those countries are currently trading. Their markets are open in Asia. Well, let's talk about commentary. I keep hearing, and I've heard it for years, but you don't need to worry about fundamentals, just trade. Well, yesterday was a perfect example of, yes, you do need to watch fundamentals. I was at my charts when this happened, and that candle dropped so fast. And I used the news service Trade the News, and even the guy on Trade the News didn't even know exactly what had happened at first. What had happened was an ECB person, they gave us a name, but he's not like a governor or anything, but an ECB person stated that they were going to front load their quantitative easing, and to me, that reads that they're going to just put more money into that quantitative easing project. and the markets took that and ran with it. And this was 40 minutes before the London Open. And these pairs just dropped. And you'll see the big red candles today as we look at some currency charts. Traders, you do not need to trade news. You don't have to trade fundamentals. But you surely have to make sure that you are aware of when they're coming out. And if they come out, what happened? This was not a scheduled event. This came out of nowhere. This was totally out of nowhere. This guy said this comment, and the markets went berserk. And basically that was the end of the trading day because there was some price action, but not much after that. So my commentary point today is pay attention to fundamentals. You don't have to trade the news to be a successful Forex trader, but you need to know it's there. And if something happens, why did it happen? All right, enough of me ranting on that. Let's move over. We're going to take a look at some 60-minute Forex charts. That, remember, traders, that means that every single candle on the chart is 60 minutes. Let's start with the euro dollar. Okay, see that big red candle? That's it, folks. That is the big candle. That is what that announcement was. The euro, as it always does, gave you a nice pullback. 3 hours later, thank you very much. That was London lunch, folks. 3 hours later, gave you a nice down trade, and you could have made some pips there. So today, the trade plan is we want to see this pull back up to the 38.2 at 1.1211, and we'll take it back down. Do I think it's going to happen? I think so, because the euro is good about giving pullbacks, and I don't think it's going to break that 0.0 fib line and just continue down. If it does, we'll just look for a retest and we'll sell it. But I think we will get a pullback before the London Open. Well, let's take a look at the Great British Pound. The Great British Pound reacted to the data, but didn't react as drastic. It reacted, but took a longer time. It didn't give you one big candle. It gave you two big candles. Then came back. It came down, and we are where we're at. And as you can see, the last four candles of the Asia session were in the 65 pip range, which is pretty nasty, to be honest with you. So I'd love to. The pound dollar is bullish. Okay, the pound dollar is bullish on the daily chart. So I'd really like to see this come back down to 1.5478, and we will take this all the way up to the 200 exponential moving average at 1.5580 and buy this. So you say, William, what happens if it breaks to the downside? Well, that's fine. It's going to break that lower range line, wait for a retest. Now that comes resistance, and we sell it. Always remember, we buy at support and we sell at resistance. So what are you going to do if it comes up to the top of the 65 pip range and gives you a bearish candlestick formation? Well, traders, you can trade it down. There's nothing wrong with that. Just realize it's a counter trend trade via the daily chart. Okay, it's not a counter trend trade via this chart, but via the daily chart, that would be a counter trend trade. And I like to stay with the trend of the higher time frames. All right, let's take a look at the Aussie dollar. The Aussie gave us the big red candle. Actually gave you a blue candle and then came on down, and that was later. And oh, I'm sorry, traders. Couldn't get to the mic quick enough. And anyhow, so here we are. We have two red candles in the last 2 hours. So we're looking for the pullback to the 618 at 0.7948. And we'll take it down to the 79.10 area, 79.15 area, where we don't want to be fighting that 7900 because you know there are orders there. So that negates the trade of trading this if it breaks that 100 line on the fib, right? So that takes that option out. Now, if it gets down to 78.90, you know, and gives you a bearish candlestick formation, well, then you could take the trade from there, and that 79.06 is now resistance, and you can take it from there. So you do have a couple of options there. I'd love to see this pull all the way back up, though. I wouldn't mind if this pulled all the way back up to the 200, and just we could take it down. Take a look at the Euro Aussie. Did move quite nicely yesterday. This was really hard on me today coming up with some of these trade plans because they were very difficult. They were not easy trade plans to come up with. I put a trend line in here, and it is a 3-touch trend line, but I don't like using a current candle as part of the trend line. So if you take a notice that the 200 is at the 1.4118 price level, but notice where I put the arrow to take the down trade, the sell trade. It's at 42.24. Why did I put the arrow there? I put it there because if you look left of the chart, that's past that previous support line. And I want to make sure we get past that previous support so we don't have any issues there. Traders, if this breaks and we can get that entry, we have a wide open space all the way down to 39.48 and more to the downside. So this is a really nice pair to trade, and we have plenty of pips if this breaks to the downside. This can bounce off this 200 and go all the way up to the 200 exponential moving average, and then we can sell it from there, which would be nice. But as we know, when this pair gets to the 200, it just likes hanging out there for hours and hours. So we'll see what happens. Let's hope this trade works. You know, we've got like 5 hours before the London Open, so we got plenty of time. See Euro Yen. The Euro Yen, we want to sell this on this trend line. If you notice, I put a fib on here, and we're at the 38.2, and we're at resistance. So, you know, we want to sell this. And if this breaks this and goes up to the 200, that's fine on 135.100 psychological level, and then it'll break down from there. So either way, we have two good entries, and we just want to take this down. And the question is, where are you going to get in? I would definitely not get in before the trend line break unless you get up to the 200 exponential moving average. And then just realize once you get back down to that resistance line, you're going to get a bounce there, and it's possible it's going to bounce back up again. So make sure you break even and you protect yourself and your trade. And of course, always keep your economic calendar in front of you. And the last pair of the day is our New Zealand dollar. Bearish, and looking pretty good. I like this trade. We wanted to pull back up to the 38.2. The disadvantage of this trade right here, folks, is that it's only a 30 pip trade. So you really have to be on your game here to take this. If it breaks that 0.0 line on the fib to the downside, you need a retest, right? Then that comes resistance, and you can take it and short it because we sell at resistance and buy at support. This is going to be a challenging trade. If this drops from here, you know, you're dropping right into support. This needs to break to that 38.2. It needs to move up a notch. We need to get up a notch so we can make sure we're safe when we get into our trade and get break even. Because what's the name of the game? Capital preservation. Live to trade tomorrow. All right, traders, on behalf of myself, William Gilday, and our great friends at FXCL Excellence in Trading, I'd like to thank you for joining me on Hump Day, Wednesday, May 20th, 2015. Traders, always remember to trade smart and not hard. Traders, have a great trading day, and we'll see you tomorrow before the London Open. Take care, traders, and bye-bye.